Hey everybody, welcome back. Sive Morten here with the Forex Peace Army.com. Let's have a look on the gold market once again. As usual, we have prepared a report. I put the link down below the video, and this time we have talked about some interesting data that we've got this week. This week we do not have a lot of information, so as you can see, generally not a lot of releases. Overall price action was relatively quiet, except maybe the couple of sessions, and that's mostly was the result of the geopolitics. But at the same time, it's very interesting ongoing processes standing right now globally, not only United States economy, but in the European Union as well. And that has the direct impact on our view on the gold. Why this time everything might be a bit different? Why we think that in the longer term, compares to the previous historical same periods, this time it might be different. And if you could see, for example, big decreasing for gold starting somewhere in 1970s up to the 2010. In our situation, we think that it will be quite different, and we do not expect any big collapse on the gold market, although in a year's time it should remain under some pressure, mostly because of the Fed Reserve policy and the moment until the real rates will keep growing. This could last for half a year, maybe longer, but at some point, the potential of this process is quite limited, as an ability of the United States budget to support the different stimulus, as ability of the Federal Reserve to keep rates really high, because it will destroy the risk assets, will destroy financial markets, and it will destroy actually the economy and the consumption. If this will stand on the background of the rising spending as an epidemic period, that anyway will lead to drop because inflation of the real rates, because inflation will growing faster rather than the Fed rate. So whatever the situation will be, either if United States will turn the stimulus and any kind of the quantitative easing, which we think is a base case scenario, or they will choose the hard strategy, hard option with the collapse of the economy following a recession and contraction of the United States economy for 20-25% to match the consumption ability of a population to consume with the real production. It's anyway, it will support gold. That's why once the period of this increasing of the real rate will be over, gold market will get the chance for possible appreciation. So that's what we analyzed today, and actually provided some charts, data as usual. So I think that it's might be interesting to you. Speaking about the short-term perspective, let's keep an eye on. First of all, we have provided interesting view on long-term charts in a report as well, on the monthly in particular, and why we think that the performance might be quite different compared to what investors really expect. For now, some interesting opportunities, some interesting setups might be formed on the monthly chart in the current circumstances. It's not definitely that will happen, but the overall price shape that we have on the monthly chart, let's say, it doesn't exclude this scenario. So on the shorter term, first of all, we have to remind you that the conclusion that we have made last week and weekend, that market has really few chances to break 44. It's just because this is weekly oversold area, and that really has happened. Market has made some minor challenge here and returned it back up. With this pullback, here the minimum target of this garbage triple to buy pattern is already completed. And currently the major question is what to expect, whether we will get downside continuation here, or market has a bit more chances to show the pullback. And the answer to this question stands mostly on intraday charts. But first, important thing that I would like to warn you about, on a retail broker chart, you could recognize that we have the bearish grabber. In my case, this is FXCM charts. Maybe if you're using some other retail brokers, I don't know, Fix Pro or whatever, Dukascopy, whatever, it also might show you that you have the grabber. But if you take a look at the futures market, you will see that in the comics, I use for identification of the patterns the continuous futures because it doesn't include the gap that's because of the cost of the money. So if you compare the different futures, the pricing of the futures includes the cost of the money, and the far standing futures have different price levels compared to near standing futures. Correspondingly, if you use particular futures, you also could see different patterns are forming. For example, you could find this grabber on the June future, but you will not see it on the September. That's why for price identification, for pattern identification, we are using continuous futures. And continuous futures, you can see that they exclude these gaps of that is based on the pricing. And you can see that we do not have the grabber here. That's why I wouldn't rely too much on this one. It's can't be used for currently as not reliable actually for our trading. Better, I prefer to watch on particular pattern. And if you take a look at the fundamental chart, you could see that everything depends right now just on these head and shoulders. So combining these two swings down and upward, you could suggest that this is a great example of bullish engulfing pattern. Divergence that they have mentioned here is already completed because market has shown this spike which is above this top, and the divergence is done. Now the things that we would like to see, just retracement down approximately somewhere to the 4460 area, maybe slightly higher 4480, where we will be watching for forming on the right arm. And that pattern will become the clue to next step. If it starts working, then indeed market has ability to show the deeper upper direction, and who knows, that may become of the something greater as it follows to our analysis of the monthly chart, where it's really might be epic perspective of that. But even if it completes just a minor target somewhere around 47, it also will be not bad as we will get this pullback. Alternatively, failure around 44.80, 44.60 dropping down tells us that market's going lower. Yes, probably due to the oversold situation, we will not get straightforward action back to the 41, but it tells us that retracement is over and at least some downside extension, mining continuation this week really could happen. Definitely somewhere to 42, 75, 43 is quite possible in such circumstances. So that's actually what we would like to keep an eye on. So for the bulls, we do nothing, watching for this support area to decide whether we would like to go long there or not. Watching for the patterns around there, something like this. You can see on the bottom of the left arm, we've got these hand shoulders. So here's something might be similar. For the bears, currently you have to wait either the failure of this pattern, so market start moving lower. Theoretically, you could try and take the short position around the neckline, but this is only for scalp traders with the target around the same area. But first, I would get some patterns before taking the position, because it may be quite risky. Sometimes it happens that market just break it up and keep going higher without any head and shoulders to be formed, especially when market is bouncing up from the weekly oversold. It's also might happen. This is the risk factor. In fact, I wouldn't recommend you to do this, but of course I can't forbid you to do this, and just call you to get at least some minor background before taking position, at least something on the back. Maybe even mine got is cheaper to sell here. It might be something you could place stop just below this area to minimize your risk. That's just my 2 cents on the gold. Let's see how it will turn. But the fact that we have more or less significant patterns in place, it already makes sense to dealing with this market, and well, led us to actually trade in some comfort that we have the particular patterns, we know directions, we know what we in general were watching for. So it makes it a bit more interesting than in the previous couple of weeks. So that's all for now. See you next.